and start sharing the screen. Are you able to see the screen?
Yeah.
Okay, let me go back few of the slides and have a recap of the last class. Okay, so I will quickly go through. And in the last class, we discussed how much money to invest in the share, and there is no fixed one, but there is a golden rule called 100 minus your age should be equal to the equity allocation. And we know that unlike the mutual fund, you have to start, it depends on the brokerage. If you join the zero brokerage company, for example, I am in Zerodha, in many other countries there are zero brokerage, then your percentage profit will be more. And it is better that you keep on buying the small quantities of the stock in different period of time, not in a large quantity if you are very much confused. And then we discussed about the strategy, and there are large number of the companies, and we know that there are two basic ways. Number one, fundamental analysis, which will tell what are the good companies. Number two is the technical analysis. Okay, and then what shares to buy? Typically, you should buy stocks which are in the growth phase and not in the saturation on or the decline phase. Then we have also discussed about the quality and the price of the stock. You should typically buy high quality but low price stock. Then the fundamental analysis, how good a company is. So for that, there are three ways. Number one, the total economic analysis. Currently, the economics of various countries are quite down, and you should buy when the economy is going up. Then how the industry, that means a particular sector, is doing well, and then you can compare the growth among different sectors. For example, in India now, the healthcare sector is going up because of the COVID-19, and many other sectors are down. And then you have to read the sector news. There are different websites you can know about the different sector news. There are fundamental analysis, tells how good a company is, and then you can select the stock based on the mutual fund companies. I have shown you that how to select. There are many companies. You can go to the mutual fund and then select good growing mutual fund and check what are the top holdings. Then major parameter is the return on equity. It should be more than 18%. Return of capital employed should be more than 18%. There are some good websites where you can know how good a how to do a financial analysis of a company. You have to be a little bit more careful. There are many companies who inflate their profits. You can download the data in the Excel. By the way, I did not show you earlier. Let me have a quick recap. For example, here is the company called Screener.in, and then you can do the export to the Excel. So then you go here, and then it will have the company's data. There are large amount of data. Once the data is there, and then you can do, just a minute, you can enable editing, and then you can get the data. The data will be in the Excel sheet, and then you can do a lot of analysis. So there are good amount of information available. If you are an Excel expert, you can do the comparison, and you can do a lot of things. Okay, let me go back. So Then there are some companies, compare the companies. I have shown earlier classes that how to do the comparison among the different companies. And then we have ended the class. So let's begin the class today. Now I will sorry. I will now continue with the analysis for a few more slides and then stop it. Now, one of the important things is that economic mode. Economic mode is a term which is coined by Warren Buffett, which basically means that it is a company which survives for a relatively large period of time because of its uniqueness in the business. It is something special about the company, and it is something like the Darwin's theory of the natural survival. It is the survival of the fittest. So if you take any sector or any particular area, there will be a lot of competitors, correct? And among the competitors, you will find there are one or two companies which are continuously sustaining for a longer period of time. And the question is that why such companies are able to sustain for a wider period of time. For example, if you take tools, the tools, the industrial tools, Bosch is a company which is sustaining for a longer period of time. There are small tools also, but they are not able to sustain for a larger period of time. Though maybe in the price part, many of the companies will be providing much cheaper variety of the tool. Obviously, it will be threat to the bigger companies. But the bigger companies, for the quality perspective, for the service perspective, for maybe uniqueness perspective, they are existing for a longer period of time. So this happens because such companies spend a large amount of the money behind the research and development, and hence they are having improved operating margin and good cash flow. So those companies, you will see that typically now the question is that how you will see that these companies will be, they are surviving, or you will select the company as an investor. So first, keep a watch on the ROE, return on equity. It typically increases over a period of time, and also the OPM. OPM is a figure I have shown you, operating margin, and the operating margin also will increase a period of time. Okay, operating margin you will see also from the earlier stocks I have shown here. Here comes operating margin, OPM percentage. You'll be seeing that a bad companies, the OPM will slowly falling down. Okay, so this is the one, and then the next is the reserve of the plow bar. What is that? The net profit, company makes a profit, okay, and then company pays the tax, and the gross profit minus the tax is the net profit. The net profit, how it typically distributes. So part of it keeps for its own development over a period of time. It wants to invest internally. For example, the company wants to expand, so it keeps the money, and rest of the money it distributes among the shareholders as a dividend. Okay. If there is a year-on-year increase of the reserve, this one, even after paying the dividend, it means that the management is interested in the future business growth. Okay. Sorry, somebody. Sorry, I give a control maybe to someone whom I should not have given. Okay. So this reserve value should increase over a period of time. Again, I will show how to do the reserve value. Here you will go for a company and you have to go for a balance sheet. In the balance sheet, you will find that the reserve for a good company, the reserve amount of the reserve should be increasing over a period of time. As you can see that this.
Debanjan, sorry,
Hello.
Debanjan.
The screen is not
Hello.
shared.
Yeah, your screen is not shared.
Sorry. Yeah. Are you able to see?
Yeah.
Yeah, as you can see, for a good company, the reserve which appears in the balance sheet, it will increase year on year over a period of time. So you can see that this particular company's reserve is increasing. Now, if I go to another company, let me say Tata Power Company. It is not like that this company is very bad. It is also increasing over a period of time. Okay. But very small companies, you will see the reserve is not so much increasing. But in terms of the Tata Power, you will see that the reserve was 12,000 crores in 2010, and since that the reserve is not very much consistently increasing. Since 2010 till 2017, you will see almost it did not grow. That means it did not have much amount of the profit, and after paying to the shareholders, the fund is not increasing. It is equivalent to the fact that you are earning in your family, and whatever you are earning, almost everything you are spending. So actually your savings is not growing over a period of time. So that is the equivalent of the reserve of the plowback. Now let's go for the debt divided by the equity. It is called debt to equity ratio. You know, it is best that you choose a debt-free company. It is something like that, again, running your own personal fund. You should not go for any debt. The person who did not borrow anything from the outside market, be it, suppose you are trying to buy real estate, or you are trying to buy one car, okay, you typically go to the financier and get the debt, but you are in a debt trap. You have to repay the amount. What will happen? Suppose you lose your job, you will not be able to pay the debt because you are earning, and then out of the earning savings, you are now paying to the debt as an EMI. So there are companies which are basically debt-free companies, but infrastructure companies which need the large amount of the investment, typically the power companies, any big manufacturing industries, they need a lot of land, they need to set up the factory, they need a lot of capital equipment, not like the software companies like us. They need a high amount of the debt. The disadvantage of the debt is that, yes, part of the debt you can spend from the reserve or the plowback, but also typically what company does, it goes into the bank, or it accepts the company FDs, or it goes to any financial institution and get the debt. The problem of the debt is that you have to pay the interest. And how do you pay the interest? Whenever you are earning the profit, a part of the profit you need to pay behind the interest. So as the debt increases, the interest increases and the profit goes down. So basically you should go for a debt-free company. Now again, you can go here and then check what is the debt to equity ratio of a company. And you will see, for example, these are the things where there are debt to equity ratio. You will see out of these companies, because these are the power generation companies, it requires high amount of the debt. Out of that, you can see that NHPC Limited is having the lowest the debt to equity ratio. In fact, ideally, the debt to equity ratio should be 0 or it should be less than 1. Here, you can see the Power Grid Corporation or Adani Green is the highest debt to equity ratio. So though it is Adani Green, but actually it is going to be red over a part, or even the Adani Power. So never buy an industry which is having comparative to other things, high debt to equity ratio. Okay. Now, let me go another important parameter, which is the earnings per share. Okay. The earnings per share, I don't know whether I've given the definition or not. I've given in a note. Okay. So I've given basically a detailed explanation here. Okay. EPS is basically the profit after tax divided by the total number of the equity share. Now, EPS is a tool. You will see that as the profit after tax increases, because the total number of equity share, the denominator, is the constant. So if the PAT increases over a period of time, the EPS increases. As the EPS increases, it is a direct correlation of the stock that I will go to the earlier one and say Divi's laboratory. There is a figure called EPS. I'm not sure whether it is. Yes, it is there. You can see that this particular row EPS, and the EPS is increasing. Okay, overall, or it is almost remaining the same. There are a lot of research reports which gives the graphical value of the EPS, and you have to read those research report which will give you. I will show how to access those. And then the last point is the dividend payout. Now, dividend I have explained earlier. It is the portion of the money that you give to the shareholders, and it is an income continuously for the people who are having the shares, and the amount of the dividend it will keep on growing as the company makes more and more profit. So the dividend payout is the formula that dividend paid divided by the net income, and that should increase over a period of time. Okay. Because as the denominator, or it should keep constant. In that case, the dividend paid is also getting increased. So year on year, you are basically having more and more amount of the money created to your bank account. Okay, now this is the one you should compare among the competitors. Now, you will see though Sun Pharma is not in a very good shape, but it will show you a comparative results of different companies. I have shown you such things in the screener.in. You can plot this value, or this particular data I have taken from the money control. I will show you how to do that. You go to there. Okay, you go to money control, and then in the money control you type say any company, I'll say Torrent Pharmaceuticals. Okay, and then you go to the peers. In the peers, you will do that market capitalization wise. Okay, and you can see say view more, and you will be seeing a comparison among the market capitalization what we discussed. Because the large companies will have the large market capitalization. That means the stock market price multiplied by number of shares available. So large cap companies are safer, but not necessarily true. You can see the example we were showing the Divi's lab. And so you can pick up the small cap companies which are having much lower distance. But as I have explained in the past, small cap companies are very much risky. So you can compare with the market capitalization. There are other figures. For example, you can see the net profit or else other figures in net profit. Then you go here. Okay, then it will sort in the highest to the lowest. What is the net profit of the company and what is the percentage change also it will show. So you can basically do a comparison among different parameters among the companies. Okay. Now let me go to the next part. Yes, price is to earning ratio. That is another figure. But to me, I mean, basically this gives that what you call market value per share divided by earnings per share. Now, many of the stock analysts give a high importance on the P ratio. But I personally do not like this one because I have seen that it is not a very important figure. But for the theoretical exercise, you should keep and watch. Basically, the less the amount of the PE, then it will be lesser time to recover your investment. So the lower PE values are most wanted, but I have seen there are highly growing stocks which are having very high value of PE. So I really do not buy in that. However, there is a complicated formula. I don't want to go into the details of the formula. It is something like that. If you can formulate that over a last year average of the PE, and then there is a different range, and you assess. If you see that the PE value, this one, as a 40 to 60% of the average, this particular figure, in that case, it is a highest opportunity to invest. But however, I have not invested. I mean, this is a good thing. Those who want to go into the deep of the fundamental analysis, they can analyze on the PE. Like that, there is one important thing, because you must be feeling some stock prices are very high, some stock prices are very low. Should you buy the low value stock? Now there is something called valuation. That means a natural value, how much is the right price, and that is guided by the PEG ratio. Okay, again, I'm not going to explain what is the PEG ratio. It will be extremely boring, and you can study from the market. But there is an analysis. There is also analysis called that discounted flow method. Okay, DCF value or something like that. People do a lot of analysis to see that. Okay, I mean, how much is that? What do you call? How much is that the evaluation, and then you can go for that. But I don't give much importance. But typically, you should have that. Typically, if you are interested, you can go for the calculation and then have the great opportunity to invest. Another important is that the company should be paying tax rigorously. In India, earlier the tax amount was 30%, and including all the what you call additional tax value, it comes around 33%. Now there are companies which pay less tax. They typically avoid to pay tax. So they are not the good companies. You can again see that, okay, The value will be there somewhere. Yes, there is a value called tax. Okay, the companies which will be paying near to this tax, I mean that 30% or something. If somebody pays less tax, then you have to put a question mark. Okay, so these are all the indicators, and you should judge the company as per those indicators. Another thing is that you should read the company's history. Okay, so I will again show the this thing, company's history. You should go to the money control. Okay, and then here there's a company. If you go to the top, company information, go further down, there's a company history. So click here and read about the company. The more you know about the company, it is better. Something is not coming. It's coming. So how the company is growing over a period of time, the complete history, it will be written. And then reading the history, you will understand whether the company is expanding or it is maintaining the same thing. As you can see that Torrent has become one of the largest exporter of medical formulation from India. It sells over 70 countries and network over this thing. So typically you will be coming to know about the history of the company. And as I told earlier, a famous dialogue from the Peter Lynch, that you should do a research on the company and then you should see that whether this company over a period of time has gone into a really growth phase. Okay, and further is that you should go for a trend, the research report. One of the example of the research report is that you should go into the trend line. This is a site where you can search any of the stock, and they have got a called the reports. So if you click to the reports, you will see there are the reports published by many brokerage companies. So let me download one of the reports. Okay. It is not like that you should always trust to the reports, but you will get a lot of information to the report. So you will see that typically in the quarter, they will publish the report. It will also give you overview of the fundamental things, and there will be a lot of data. Sometimes the research reports are very, very big, and this research report helps us. I mean, it is not a one page. Maybe it is few pages, and it many of the time, I mean, compares with a large number of the competitors. Okay, so from time to time, you should be going on this one. For example, if I go this one, this research. So you see, this is the one which gives much more advantages. Okay, and it will give a lot of the parameters, and you should read those things, and then you can judge that whether it is the right time and the right company to invest. Okay. So now coming to the interesting part, the technical analysis. Now here, technical analysis means there are two parts. Here I present the technical analysis to select companies, and not a tool here when to buy and when to sell. When to buy and when to sell, there is a second part of the technical analysis. I will present either today I will start or later on. But let's look into the technical analysis which will guide you to select the companies. So, basic premise of the technical analysis. There is one person, Robert A. Levy, who postulated following laws. Market prices are determined by the interaction of the supply and demand force. That's how it is. The prices are going up and prices are going down. For example, now the overall prices a few days back had crashed down because a lot of, what do you call, there were a lot of sellers in the market. People, they were fearing and they started selling. Selling the stocks, including the foreign investors who have invested from the foreign companies into India. They were taking out the money. So there were more selling pressures. Number two is that supply and demand are influenced by various factors, both rational and irrational. You have to understand the game of the stock market is not very mathematical. People are having a lot of emotional factors and they will be guided by the emotional factors. Obviously, there is a pattern of the psychological factor. If you can understand the pattern of the psychological factor, it is great. As I told you, it is like you are bathing in the seashore and you cannot ask the sea that why the wave is suddenly so high, why it is low. You have to go along with the waves. Okay. So then barring minor deviations, stock prices tend to move in a fairly persistent state. That is the important thing. So you have to understand the trend. What is the current trend? Okay. And there is a systematic trend. If you analyze the trend, okay, they will move in a particular direction. Shifts in the demands and the supply changes in the state. What does it mean? Now, suppose there is a force that the stock price is going up, 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 up. Then suddenly there will be a shifting and then it will be going down, 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 down. Or whenever it is going down, there is a sudden switch. I will just give you the example of that. Let me go to the card here. You will see here, okay, it was going down, 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 okay? And then it was oscillating. Suddenly there is a mood swing and it is going up, 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 okay? So it means like that there will be shifts in the demands and the supply changes in the trade. The people who can understand that there is a sudden shift in the demand and the supply, they will make money. Okay. Irrespective of why they occur, shifts in demand and supply can be detected with the help of a chart of market action. So I will show you that how to detect this suddenly change in the demand and the supply. Frankly speaking, this earlier point and this point, if you can master, then you will be like a king in the stock market. Because based upon in the understanding that shifting, you can make a lot of money. And the last point, because of the persistent trends and pattern, analysis of the past market data can be used to predict future price behavior. Now you can ask me a question, can I predict? Answer is yes, you can predict. You can predict to a quite good number of predictability. Obviously, there will be certain risk factor. For example, how can we predict? Suppose you are traveling from the home to your office by a car. Let's say example. There are a lot of risks and uncertainties on the road. But can we predict that whether you can reach at the office, say within 1.5 hours? I'm just giving a figure. Because you have the earlier experience that suppose you are daily traveling, okay, and there are certain days there will be huge traffic jam, there will be certain days not so traffic jam. You also know what particular time you are going in the office. If you are going or starting too early in the morning, you'll be able to reach more or less within the predicted amount of the time. But if you are coming out late, for example, peak traffic hours, then you will take more amount of the time to reach. In fact, you cannot predict also the traffic jam. So the prediction is based on the past data. And the past data, you will see that it will give you a very, very good the predict. In the stock market also, you will be able to predict. That is a fortunate thing. So, fundamental versus technical. Now, in the fundamental, we are concerned about the intrinsic worth of a share, whether the turnover, profit, debt, reserve, all other things, EPS, and etc. Technical analysis deals with the supply and the demand of the shares. No focus of the company's profit. You don't look at how good a company is. You just see the trend and you pick up or sell the price. For the good, what do you call, company, if the price goes up, either hold or sell. Okay, the price go down, sometimes you buy. The price is steady, hold. If for the technical analysis, if the price is going up, you buy. Price is going down, sell. Price steady, hold. So the strategy will be, you see a different if you take an approach of the fundamental versus a technical. For the long-term focus, greater than 1 year, the fundamental. Short-term technical is is less than 1 year. In fact, I have made money within 2 weeks or even 1 month in the technical. Okay. In the fundamental, you will have the policy buy and hold for a longer duration of time. In technical, sometimes you will have the short-term profit. It will consider for the fundamental external factor, whereas in technical, it is only on the movement of the company. Okay. And lastly, the fundamental is for the health of the company. Technical, it does not segregate.
Sir, one doubt here.
Yeah.
In this case, we cannot consider the dividends, right? For technical.
Technical, no dividend is concerned. Dividend and everything I have told under the fundamental. Okay. Technical is only the movement of the price and how much you are going to make money in a short period of time. That is the goal of the technical. Okay.
Okay.
It only focuses on the time. When are you going to enter or buy the stock? When you are going to sell the stock. Okay. And it does not care of the company. But if you match, if you really buy a good company and then play on the technical, I can show you, you can make a lot of profit. And you are a little bit safe because of the factor I will explain later on.
Okay.
Okay. So technical analysis to select the shares, observe a share for the last 3 years, whether it is uptrend, downtrend, or oscillating. I will explain later. Then I will focus something called Dow theory, and then compare the trend among the peers, and then you have to use some screener of the stocks and to filter out other stocks. Okay. So let's go. So I have kept here, say, there is one company called RT Industries. You will see that the company's stock price is going up, going down, but there will be the stock prices will be always, it's like a wave. It will go up, then go down. But you have seen that over a period of time, the stock is an uptrend state. Okay. If you compare with the Tata Power, I have taken all the data over a 3-year period of time. Tata Power over 3-year period of time, it has been falling down. And there is our good friend Siemens Limited, where we work. It is a Siemens Limited, the Indian company. But you will see that it's oscillating in nature. In last 3 years, if you are holding the Siemens stock, you will not be a rich person, practically. In fact, I had Siemens shares, the Indian company share, which was given to our employees. I had hold it for a long time. I have made money and then I have exited completely from the Siemens Limited share. Though I know consciously I work for this company, but it is nothing that to you the company is not important. To you, money is important. You have to understand. I mean, you don't have to consider the stocks like your children is like close to your heart. No, what it is close to your heart is the money. So you have to see that I earlier commented something that you are like a CEO of a company that perform or perish. So Siemens Limited, it was falling down. Maybe people at this point of time, I commented earlier that there was a shift in the demand and supply chain, and those people who have picked up this stock at this period of time, and when it went up high, then exited from the stock, they have made money. Okay, but it is not a what you call long-term stock. So basically, you have to consider trend as your friend. Bulls make money, bears make money, but pigs just get slaughtered. Dow theory is a very important theory. The theory says that there is a primary trend, there is a secondary trend, and there is a minor trend. The primary trend is that, okay, over a certain period of time, it is overall, it is increasing. And you will see these lines, these are called typically the resistance line, the support and resistance I will explain later on. But understand that over a period of time, I mean, it goes up, goes down, but there is a trend. Okay. Then there is a secondary trend. What is the secondary trend? That means intermittently within few weeks, it is going up, it is staying, and then it is going down, and then it is going up, then going down. So there is a trend. You have to pick up the intermediate trend, and as an investor, you have to invest whenever it is switching from the demand and supply. These are the points, the line where it is touching. There you have to invest. Not that, okay, today you have selected some good company stock, are very much related, and you have some money, and you are jumping into the stock to buy. No. Perhaps you have invested at this point of time, which is a not right point of time to invest in the stock. And like that, there is some minor trends. For example, you are planning to sell the stocks, it has fallen down and it has reached here. So from the peak, you have fallen down and you are now here. But wait, the stock is going to jump back. And when it is going to jump back and reach the peak, you will understand, and then you will be selling out the stock, not at the bottom. So there are minor trends also you have to look at. Okay, now this particular thing, I think I already placed somewhere. Yes, in the earlier class, I have said that how you are going to compare it over a period of time. In fact, this concept has been taken from the money control, in which you can do a comparison analysis. If you go to say money control, there are different sectors, and in the different sectors you can see that how it has been growing, the price has been growing over a period of time. Okay, so here you can see, for example, if you go, there are different sectors here. Okay, so you have to choose one of the sectors. Now you have to choose through the mutual fund route, not through here. Okay, so you go, say, let me select footwear. Footwear is quite growing in India because it is a population linked. Okay, not. So you will see that how this one over a period of time, this is growing. It was grown, and then last 1 year is almost is 3.5 so you can say relax. So comparatively, that last 1 year it has grown quite 53.8%. So like that, you can do the comparative analysis. Okay, now you can use also the screeners. The screener I will show you is a very interesting thing. For example, I have gone Oh my God, I cannot show you this under maintenance. You can do also the screeners. But the earlier slide, when it will be not under maintenance, this is a very good interesting thing. Okay, so you can see that in the screener there is a the filter. You can design the filter also, but they have already designed something. These are the growth stocks. Okay, and they have put some formula here. You can put the formula here. You can run the query, and then you can have identified some intention. So there are parameters we'll be setting based on the parameters, and then some stocks will be coming. Okay. So let me go to now the next ones. Okay, market sentiment. This is a very interesting thing. Market sentiment is a figure. There are two interesting sides, market scanner and the trend line. The market sentiment gives you that about the stock, you are taking your own decision whether to buy or sell. But basically, the price of the stock will be moving up or the down based on the brokers. Who are the brokers? The brokers are typically the mutual fund managers who are having, owning these stocks in the much larger quantity. So if they start selling in a huge quantity, the market will fall down. If they start picking up the stocks, it will be in the market, the value of their share will go up. So typically, every mutual fund manager has their own decision point. And also FIIs, or the foreign institutional investors, they will have their own decision. So everybody analyzes differently, but typically the sentiment will tell you that who is having more buy call or the bullish. For example, if you go to the market scanner, it will show you that, okay, this is a DMART typically. So the price is going up for the DMART, and then you will see that the market sentiment overall, almost 66.82% they are telling buy. Okay, a small percentage is selling. Okay, telling is a sell, and this is the call of the consensus deal. That means buy, outperform, hold. So most of the people, they are selling the hold, and this is the last figure. It shows over a period of time, okay, that how this call is changing. Okay. Compared to that, if you see the Divi's laboratory, now Divi's laboratory is a 73% is giving a buy call, earlier 66%. And here you will see that most of the people are giving a buy call. Okay. And here the psychology of the people, of the buyers, of the investor, it is not changing much over a period of time. The trend, you will see that the bullish, short term, mid term, long term. Let us go to one example how to go with that. This is the market screeners. So you will see that in the summary, there will be the overall these things, neutral, bullish. It will come, okay, and then you go to the consensus. I don't know, it's not now going, but yeah. In the consensus, you will see the call is given. Okay. So you take this and try to judge whether you need to go into that. Okay. So this is the screener of the stock. So there is another thing, is a WW4 traders. It is the same as the market trainer. So you will go here and you can screen. Okay, you will see some of the stocks are short term, middle term, long term. This is a pickup. Okay, and then if it is not so good, then you can avoid. For traders is now renamed as a market screener. The ranking of the stock growth I've explained earlier, so I will skip this slide because I've explained this one in detail. So you will also always pick up the stocks which are consistently giving more percentage growth over a period of time, especially more than 1 year. Tips to pick up some good stocks. Okay. So one of the tip is 52-week high stocks you should pick. Top mutual fund holding. There is a website called Rakesh Jhunjhunwala. I visit them regularly. They are a good, what you call, a fan of Rakesh Jhunjhunwala, who is like a Warren Buffett of India, and many of them are also mutual fund managers. Okay, the stocks with the export order I typically prefer because they have got a global market. And then also there is a one important website I need to show. This is a forumvaluepicker.com. It is a group of investors who are very knowledgeable investors. Okay, and you will get a lot of things to know about a company. For example, if I search, say, Divi's Laboratory, okay, you will come to know about this company a lot. And there are people who will be typically sharing the inside knowledge of this. They really go into the conference call details and the detail of the company, and then they share a lot of information. Suppose you are missing some of the things in the newspaper, somebody comes to know, pick up a small story from the newspaper. Suppose there is a case against that company, it will be immediately posting here. So it is good to visit some these sites and then come to know that about the inside of a company. Is you may miss reading many newspapers, but these are the feed channels. Maybe there are Twitters and other schemes. I have not invested time, but basically the thing is that you have to be investing, time behind knowing of the company. Okay, now there is not much time. I think we have already surpassed the time. So in the next class, I will exactly tell the details, and it will enable you when to buy and when to sell, the details about the technical analysis. So that you will be really making money or planning to make money. So I would stop here, but now I would take few of the questions. Okay.
Good evening, Debanjan. Can you hear me?
Yes, I can hear you.
Yeah, so in the earlier slide, it was mentioned pick 52-week high stocks. So what is the meaning of this?
That's an important thing. So if you see, if you go to any stock, okay. Now this one. So you'll be seeing that this particular stock, say Avenue Supermarkets. So if you take from today and you are going back 52-week back, that means 52-week is typically 1 year, correct?
Correct. Yeah.
So 1 year back, if you go, and you will see that there are the stock price was earlier high or the low. So you have to pick whichever is a 52-week. That means it is making a new high. For example, in 1 year period, you can see that this one is not a 52-week high. Why? Because on 15th May, the stock value was 2355, but on 7th of February, this stock price was much higher. So this particular stock is not a 52-week high. Now, how you will be identifying 52 weeks? It is an interesting question. Maybe you can go to the BSE and Bombay Stock Exchange, and in the Bombay Stock Exchange there is a information about the 52-week high or low. Okay. Now, how exactly to do it? Maybe you have to do a Google. Okay. So you have to go here. I know it is in yes, you will be able to find.
Okay.
You'll be able to find here. Okay. 52-week high of the stocks. These are the stocks. Okay. Which is the 52-week high. For example, Ajanta Pharma, Aarti Drugs. Aarti Drugs is one of the famous company. Ajanta Pharma was also. So now Ajanta Pharma, if you click here, you will see that it is a 52-week high. Okay. So if you see the 1-year trend, so typically the 52-week high will give you an indication that this stock is now coming up. Okay. Never pick up 52-week low. Many people, they think that, okay, it is a very low price stock. Now earlier it was a very high price. Now it is a low price. Let me pick up the what you call low price. No, that's a wrong idea. Okay. But sometimes you may also be misguided because now it is high and then it can also fall down. So as I told you, when you learn the switch between the falling down and the reversal of the stock bracket. For example, this has happened exactly here. It was sometime back as high as 1473 and then it fell down 1058. Okay, though it was not a 52-week high, that time it was 52 week. Now you start watching the stocks. Okay, now these stocks, as I told you, will bounce back. I mean, will fall down. So then there is a high probability that the stock will go up. Now, this particular point you have to identify. For that, you have to learn there are several techniques for that. I will show you. One is the Ichimoku, another is that what you call support and resistance. When you understand these details of the technical analysis, you'll be exactly able to identify at what point of time you have to buy the stock, which I will cover in the next class. Okay. So currently, keep under the watchdog. This stock you can buy. Okay.
Okay. Okay. Thanks.
Next question.
Sir, you are speaking about the trends, right? What if the
Yes.
stock is like jumping up and down on a daily basis?
Yeah. So don't give the overall, I would say, sorry, overall the jump up and down. You will see I have shown you earlier how you will be, see this one, I have shown you the candlesticks, okay? For example, this one is jumping up, previous day it was jumping down. So whether a stock price is jumping up or down is not a decision for you to buy. It is an information. And how you will be availing this information, I will show you later on.
Okay.
And you have to see other parameters. A typical example is that suppose you go to a doctor and you are telling the doctor, I have taken my temperature, I am running with a fever. Okay. And today morning the fever was low. And then I observed that after few hours, the fever was high. It was in the morning, it was 99, and then it went up to 100. Okay. And then at maybe in the afternoon, it again came down. So doctor will listen all this story. But he will tell you, no. Your fever is going up, down, something is happening. Maybe you have taken some medicine. I want to know what are the other symptoms you are having. Whether you are having cough, whether you are having shivering. So he will observe the other parameters. Okay. So what you told only one parameter, whether the stock is going up or down. Now the other parameters, which are, you can see the blue line and the red line, and then something called MACD, signal, stochastic. Those I have not explained you. I will explain in the future classes. And these are the indicators, like the other investigation report the doctor wants to have from the patient, through which they will be able to predict that, okay, you are going to have this. Okay. For example, for this stock, I know exactly this is the day I can buy the stock. Now, how on 26 March I'll be able to buy the stock? Now, why and etc. There are some characteristics. For that, you have to understand the candlestick pattern. You have to understand the stochastic. And if I have made the decision, I will make a lot of money. From 1983, I'll enter and maybe somewhere here, particularly on 29 April 2370, I'll exit from the stock and I will make a lot of money. Okay. Next question.
Debanjan, how do you decide whether it's a short term or a long term? I mean, you look into 2-3 years data and then decide what would be the criteria?
I typically look at the 3 years down the line data. Okay, I also mentioned. So for me, a benchmark is a 3 years. Obviously, for many of the stocks, I also look in the 5-year data, which is the long-term data. Because the short-term data, see, in the 3 years is a good amount of the prediction. And if I go some of the stocks in the long term, I mean, I will see that the stock prices are going up and the stock prices are going down. For example, I will take Adani Enterprises. It is a very, very, very big company. Now, let me take the 3 years data. Okay. Now, tell me, as an investor, will you be interested to buy these stocks? My question is, I mean, my answer will be no. Why? Because the amount of the, see, it will go, the top, it will go down. Typically, these stocks, in the long run, it will not make you a very rich person. Because it is a cyclic stocks. And you can make definitely money in the shorter, but you have to be very agile. So sometimes what I feel is that many of the stocks, good stocks, I would say, I would not say Adani Enterprises is a bad stock. It's a very large company. But the good stocks, what I mean is that when you start managing a larger amount of the stocks, maybe 20 numbers, 13 numbers, and then you do not want some of the stocks which are not growing over a period of time. Typically, they should be continuously giving you the money. And you will feel the practical difficulty that you will not be able to manage the large amount of the stocks because you have to spend on each of the stocks for the monitoring. So typically avoid those stocks which a period of time last 3 years, they have been moving up and moving down. That's why I presented in one of the slides, if you have seen. That grow your money uptrend last 3 years, downtrend lose your money, oscillating make money by being constant vigilant. And that is an important point. I told you also that for the Siemens stocks, it is not like that you cannot make money, but you have to be vigilant. So typically for me, my preference is over a 3-year period of time, if the stocks goes up and down, even if I'm not very much vigilant, it is like that, I'm watching, but overall the stock will make you a rich person over a period of time. Okay?
Yeah.
Does it answer your question?
Yes. But would you, Adani, would you invest now for short term because it's an oscillating one?
Yeah, you can invest, but it is a risky investment, as I told you.
Okay.
Now,
Yeah.
it is for you. Many people believe in the stock market, no risk, no gain. For the people who want more risk and more thrilling, I would say more thrilling, because they want to enjoy the uplift. They, for them, if you are of that particular mentality, you can pick up Adani. I don't have anything. But if you see fundamentally, this company is not a good. You will go to the fundamental analysis. So I will have a basic two broad filters. The company must be passing through the fundamental filter, satisfy all the criteria, and then it should go through the technical filter. If the both filters I get a green signal, then I consider the company to be picked up. And I can
So
also
even
play in the I can play also in the short term, the money in the fundamental strong companies. Yeah,
so
tell
that
me.
means the fundamental analysis is for long term and the technical analysis for short term.
Yeah, for the short term, actually, you need not do any fundamental analysis. For the short term, you can pick up any company, start playing, but you have to be careful about some of the fundamental factors. For example, the volume. Volume is one of the things is coming under the technical also. That means if the demand of the share is not much in the stock market, then you need to be a little bit careful. It is like that you have bought the share and you are not able to sell the share. Many of my friends have told that they have bought a land. Now they want to exit. They want to sell the land. They are not able to sell the land. Okay, there is no buyer. Now you should not land up such dangerous scenario. Okay. For that, I would prefer that play on the short term when a company is fundamentally good. And it is very easy to do that. You go to any good mutual fund site. I go to any, say, go to a mutual fund. Okay. There's a good mutual fund. So let's pick up few other. Maybe I showed you Axis, Blue Chip, or the CRA. Anything you pick up, it does not matter. These are the top ranking companies, 5-star, 4-star, they typically rank. Okay. Now you go to the mutual fund and see the top holding, and then I don't know, something is wrong. Okay. Yeah, this is coming. Canada Roco Blue Chip is a good mutual fund. And then you go here and try to see the holdings of that. Where is the holdings? Portfolio. You go to the portfolio. Okay. That means what stocks this particular mutual fund is buying. And then you try to pick up the top these, because they have done a lot of research on the companies. Okay. So this is the portfolio summary. HDFC Bank, Reliance, ICICI Bank. These are the good companies. Okay. And then with this company, you can start playing. Okay. So that is my thing. And there are different sector, bank sector, refineries sector, housing finance sector, telecom sector. I generally avoid the telecom sector because telecom, a lot of things are not so good. There are government regulations. Okay, so does it answer your question?
Yes, Debanjan, I think it's fine.
Yeah. Hi.
Hello.
Yes, tell me.
Debanjan, you mean to say that this is also one of the parameter to invest apart from fundamental, technical, and this mutual fund also who is investing there? That is also one of the parameter to invest.
I told that mutual fund comes under the fundamental. I
Okay.
presented in one of the slides also. You'll see that it comes is the one of the fundamental. In the previous class, the first point I told is it bought by many mutual fund companies. That is the first thing. If because you have selected a beautiful company, but nobody is interested about that. Okay, that does not make good. So people should be interested in this company. They should be in the market to do the buy and sell of these companies, not you. We are just the followers. We are a small petty investors. I told you the large forces comes always from the mutual fund company. They must select, they must do the, if you do not find any research report about a company, that means the company, nobody is investing any time about that company. That company may not be worth investing. Sometimes, if you are very, very experienced, like Warren Buffett, when nobody was talking about a company, he picked up many of the companies. Okay. And it was an underdog, something like that. And later on, when the company started growing and growing, so that was Warren Buffett's policy. But you are not at the Warren Buffett level. You cannot take so much of risk. You are having your hard-earned money. So your hard-earned money you cannot risk in many of the things. So best thing is that go by the large mutual fund companies and see what are the good mutual funds and pick up a few of the top ones. You will not suddenly lose the money. I can guarantee. Okay.
Okay.
Any other question?
Sir, one thing, like you are being saying that pharmaceutical companies are good time to invest right now. Okay. Can you show the trend analysis on Biocon?
Yeah, Biocon I can show. So my initial judgment, okay, now forget about my initial judgment. Tell me, what is your judgment about the Biocon? This is the 3-year data.
Okay.
What is
so it has been
your
up
judgment?
and down.
But what is the overall reading? Okay.
Okay, so
Do you want to pick up this talk? My answer will be no. Why? Because starting from 7th February, 2018 till now, the stock is at almost the same level. It is not much growth. Okay. So it is not a very big earner for it. Okay. From this time to this time, now because of the COVID, say since 7th October, you can still pick up the top. But it will not come to me as a one of the topmost stock. So here, I think I have to exit from that. Okay. Because I have shown you earlier that the Biocon, I have to pick up the stock only when it is growing over a period of time. I mean, if I see compared to that, for example, Torrent Pharma. Okay. You can go to Torrent Pharma. They are the competing companies. In fact, here there are certain tools which is called performance chart. You can do also the performance chart later on. I will say Biocon. I will pick a Biocon. So it will show you over a period of time, the Biocon. Then I will also pick up the disease laboratory. The second one, it will do the comparison. The third one, I'll pick up Trident Pharma. Fourth one, say Sun Pharmaceuticals. Now let's look at the comparison, the technical analysis of these four companies. Okay. So the benchmark when this is called normalization. That means on particular day, I'm normalizing. If I do an overall normalization this is the, what do you call? This is the date from July 2017. You will see the growth of Divi's laboratory is a maximum.
Okay.
Okay. If I do a growth here, say this one, you will see the Biocon, the blue one, it is falling down compared to the growth of the Torrent and this one. And about the Sun Pharmaceutical, it is the worst. So you can compare that Biocon is at least better than Sun Pharma.
Okay.
But many people, they are thinking, oh, Sun Pharma market capitalization is the biggest. So I will keep, I mean, the Sun Pharma fundamental is very good. Though if he has gone through the news, Sun Pharma is in USA, it is now battling a lot of legal battle because of the acquisition of the Ranbaxy. And the Ranbaxy is also having a lot of legal things. So there are a lot of pressure on Sun Pharma. Okay. So you will not definitely try to invest here. And if you are giving, because for you money matters, I told you. So if you have put money in either Torrent or Divi's Lab, you will make generally more money. Okay. If you are taking the short term, in the short term also you will see, yes, in the short term, if I invested this period of time, the growth of this one is almost equal. But you will see in the short term, that means since the June end in 2019, since then, the Divi's Lab is almost 57%, whereas your Biocon is 32%. Okay. In fact, in the very short term, if you want to further, I mean expand this graph, for example, in the very short term, say I will say minimum this time, you will see that Biocon has fallen down. Now you have to, as an investor, you have to understand why it is falling down, other company stocks, why it is going down. Okay. So always do a comparative analysis to judge that which are the most growing stocks. Okay.
Okay. Okay, sir. So why this tool is like anyone can use this tool?
Yeah, it is a tool based in Singapore, and I think there are what we call it is a free tool. You can use it. Okay.
Okay.
Or you can go to many of the tools which are available in the market. But generally, the advantage of this chart nexus is that the prices will be downloaded, okay, in your computer. So you do not have always what you call always depend on the online data. It will be typically synchronized. But there are different things. For example, my broker Zero app, it gives a good charting option. I need not go to anything. For example, iChart is something like that. iChart is a feature. iChart stuff. It is also a good thing. But again, all are online data. These are not the offline data. Okay. So you can go to the iChart also. There are a lot of charting options. Okay, free tool. But I have found this chart nexus is very good. It shows the clear cut buy and sell signal very clearly. It will show. Okay. But sometimes it is now hanging. I don't know. Maybe some problem. Okay. What is it?
Debanjan?
Yeah.
Yeah, this Biocon, when it has gone down, it needs to be purchased, no?
I will show you the technique. But as I told you, that Biocon is not a company which will give you a long-term profit. Okay, so as an investor, I would not suggest you to invest in Biocon. Okay. You see that from a period of time, October 2018, the Biocon price is up by only 7.2%. This is the one. Whereas if you have invested money in the October 2018 and you have not done anything, then your stock price of the Divis Lab will be up by 86%. Now, if you compare the 5 fingers of the hand, which one will you pick up? Obviously, long-term performer, not a short-term performer.
Yeah, okay. But currently that one is too high also, Divis Lab. So I can't purchase that this moment that share.
No, I told you. I told you 52 weeks high concept. Okay. So you have to wait for you have to first pick up the 52-week high stocks, wait for their fall, and then when they are making the reversal, then I'm sure Divis Lab again will fall down. Okay. Now when it will fall down, you will learn in the next class. And that time is the ideal time to pick up the Divis Lab. Okay. Now here you can also I will just cut out this one. Okay. Biocon. There is another stock, Aarti Industries. This is equally good. Okay. It's equally good. It may not be as great performance as the Divis Lab, but if you see over a period of time, yes, both are these things. But the Aarti Industries, recently, it is not so much as good, but both are good companies, as you can. Now, so you can compare between the two stocks. Obviously, they are from the different different industry sectors. Okay, so you cannot compare really apple versus oranges. You have to compare apple versus apple. Okay, but you can do a comparison among multiple companies.
Okay.
Okay, so shall we end this session? And if you have any question, maybe you can also put in the chat so that I can take you later on, or I can maybe vlog the Yamad or something like that. Okay? Is that fine?
Yeah.
Yeah. Somebody is trying to speak. Hello? Okay, so let me end this presentation. And thank you very much. And I will meet you maybe next